Good morning. Good morning.
Morning, all.
Morning, Mr. Mooney.
Good morning, everybody. 10:30 on the nose. We'll give about one more minute for folks to continue to dial in. We will get started in just 1 minute here. You got some, Aaron?
What do you say?
Looks like you got some sun.
Yeah, it's also the glare too. A little bit of both.
You look healthy. It's good for you.
I did shave my beard off for the first time in like 15 years. So I got this mustache going just to show everybody that I mean business, you know?
Clearly.
Yeah.
All right, we are just about ready to roll. If you would please mute your lines. We will go ahead and get started here. We're up to just about 30 people on the call. So thank you again, everyone, for joining us. My name is John Mooney, here with Guaranteed Rate Affinity in Chicago. My co-host and co-pilot is Aaron Wise.
Good morning.
This is the third installment of our Mortgage Monday call series. What are we doing here? We are getting together every Monday morning at 10:30, running through a quick market update. What's happening in the market? What's happening with lending programs? What's happening with interest rates? This will be a quick 20-ish minute call. We send out a recap after the call for those that were unable to join. And we are archiving these calls as well. Those will be made available to you folks as we go forward. Between Aaron and myself, we have over 40 years of lending experience here in Chicago. So this is a free, value add for you and for your clients to help make sense of the market, help you sell more homes, help you help more clients. So we'll have a quick open forum here at the end. And we'll check the chat feature. If you have questions or comments, by all means, throw them in there. We'll do our best to get to them in real time before we wrap up the call. And bring your questions. If we can't help this client and close them personally, we'll give you all the information that we have to help you close that client with whatever lender they're currently with, and iron out any wrinkles here as we go. So, Aaron, anything you want to add before we get rolling here?
Nah, just to kind of double down on what you were saying there, John. I think what we're trying to do here is, this whole thing is a fast moving train right now. I feel like anytime some information comes out to the general public, it's already kind of old news. So what we're trying to do is kind of get a little bit better about being at the forefront with pushing that information out to you right away, number one. And number two, it's a good way to start off the week, good way to start off a Monday morning, just getting a quick, good solid refresher on, okay, what do things look like? And let's get out of the gates pretty quickly. John and I are both, pretty focused on service. So we want you to have all the information that you need in order to do what you need to do. And yes, that does include evenings, weekends, stuff like that. We're really just trying to be available for you and make sure that when you're looking to make a move, and when your client has questions, let's say it's 7 o'clock on a Thursday night, we're there to help you hammer it out. So yeah, fire away.
Awesome. Love it. On that note, we have at 2 p.m. Central this Thursday, the 25th, a webinar that's being hosted by us. It's open to anyone that wants to attend it, with Lawrence Yun, who's the market economist for National Association of Realtors. 2 p.m. this Thursday. Make sure you are tuned into that. We will get invites out here later today as well. And in terms of new data, right, we're seeing is hopefully that locked-in effect that we've been talking about is slowly starting to let the air out of that balloon, right? So, you know, in Q3 of last year, almost 90% of homeowners with a mortgage had a rate that's below 6%. Okay. We're starting to see sellers come out of the woodwork just a little bit. That's typical for January here, especially since rates have dropped. And according to a Redfin study, they're also coming to terms with the fact that rates are not going to be back at 3% anytime soon, which makes it easier to kind of pull the trigger on selling. Okay. In terms of market headlines, we know that interest rates follow inflation. Okay. Rates are lower than they were 2-3 months ago. Inflation continues to make progress lower, while home prices nationwide are still on the rise. Compared to this time last year, we're about 5% higher on median home price. Okay. Annual core inflation, the consumer inflation index is lower than 4%. The Fed wants it at 2% is their goal. Wholesale inflation continues to be lower than expected. And again, home prices continue to move higher. Okay. So I'm sure most buyers right now wish they had the chance to purchase in 2021. Okay. I feel that the people that are buying in 26 or even next year in 25 are going to wish they purchased in 23 and 24. Okay. Before we move on, anything you want to add to that, Aaron?
I think the net effect of what it is you're talking about has, one piece of data that you and I were talking about before the call. There's already been a 10% surge in mortgage applications in 2024. And 2024 has been all of what, 15 business days, whatever it is. So you've got, I think, a perfect storm of what's to come, which is a bunch of pent-up buyer demand. You've got the weather will be turning here soon. I know it's only January, but we know the spring market doesn't exactly happen in April. It's more the old, Super Bowl thing, which we like to talk about. And what's kicked out, I think, what I have absolutely noticed, especially when it comes to single family homes so far, these first 3 weeks, everything is multiple offer. How crazy is that? Beginning, middle of January, and everything is multiple offer. I've heard multi-offer on condo for sure as well. But I ran into somebody just 15 minutes ago and said that they had 50 people through a single family home open house over the weekend. And it was not beautiful weather out this weekend. Granted, it wasn't zero. But I just think we're sort of, I'm cautiously optimistic, but I almost think we don't even know how busy it's going to get when it starts to get busy. So I feel like we really got to get our house in order and figure out how we're going to be able to maneuver through multiple offer scenarios successfully, because I feel like that's what's going to happen, and it's coming in fast and furious, and it's here to stay for a while. So.
Yeah, so tools that we have to help your buyers win those competitive bid situations is it's never too early to get started. So even if your client feels that they're not going to really start looking until spring, summer, fall, it's never too early to get started. We have a power bid pre-approval program, which I describe as it takes the pre off the pre-approval. You're getting a underwriting mortgage commitment letter with our power bid program. And we use that to compete with cash. So, it's a bona fide commitment letter. We can close in 10 days from the point of going under contract. So we want to have our customers and our buyers prepared. We may be in a situation where they've got to make $1 million decision in the matter of 2 hours, right? On those multiple bids. So never too early to get started and utilize that power bid program, because when things start moving, they can move pretty fast, as we know. Okay. On the topic of it's never too early, let's talk about credit reports. Okay. Cost of credit reports have gone up about 300% in the last couple of months. Okay, and what a lot of lenders are doing, ourselves included, is we're doing a soft pull on the initial pre-approval. Okay, why is that important? Well, the objection that we often hear when we're talking to a buyer for the first time is, yeah, I want to know what my options are, but I don't necessarily want to pull my credit yet because I heard that can ding my score. Okay, the soft pulls don't work that way. And mortgage inquiries don't hurt your score anyway, the way other types of inquiries can. But the message to your clients is, talk to John, talk to Aaron, talk to your lender. We can do a soft pull initially. So it takes any risk of personal information being shared, dings on the score itself away. Okay. One of the things that happens is when the client actually gets a hard pull on credit, that information is actually being shared, and it's being shared by the credit bureaus, not the lenders. What we found is that when someone does a hard pull on credit, they are often getting calls, emails, texts for days after that happens. Okay. We have ways to protect the client from that. But again, that doesn't happen on the soft pull. So if your client's looking at options and just wants to know, hey, what does my payment look like on this particular house? Or do I have to sell my current place in order to close on the new place? Do I have to deal with that contingency? We can answer all those questions and consult with the client based on the soft pull that we have. Okay. Aaron, what are you seeing out there with soft pulls right now?
Yeah, that was a damn good summary. One of the best advantages is that there's no timeline that starts, right? So, and I think I'm just saying it a different way. When somebody gets a soft pull done, it's a nice way of being able to see underneath the hood without actually firing up a credit report with a hard pull. So it allows us to do what we need to do and help advise. So I'll give you a good example. If somebody comes in and they're looking to do a jumbo loan, everybody, it's tough for us. I always think that when we tell people we need to pull an actual credit report, that's kind of like as an agent doing a CMA versus an agent hearing, oh, I looked on Redfin and my value was this, right? So I say that freecreditreport.com and Experian Boost are your form of Redfin and Zillow, right? So if you want to get down and dirty and you want to get the real answers, you've got to get at least a soft pull done. But it allows us in that scenario where somebody's looking for a jumbo loan, for example, if we go and we pull a 718 credit score on a jumbo loan, you might not get a fantastic deal of all deals. And if we look at that well enough in advance, we can advise that customer, hey, here's what you should do. Maybe knock down this credit card. Oh, maybe this crazy collection pulled up that shouldn't be on there in the first place. It's not too late. We're 3-4 months away. We can get that credit score up to a 740 plus. And all of a sudden the customer is getting a quarter point of a better deal, which on a $700,000 loan is, 150, 200 a month, just because we did that peek underneath the hood instead of doing it at the very last minute. So I think that's a big deal. The other piece, and we'll fire this information out to everybody too, is I'm advising everybody to go to optoutprescreen.com, or it's prescreenoptout.com. I always switch them around. But long story short is you can go on to that website. You can pop your information in there. You don't have to do social security number. You don't have to do date of birth, but you can just put your name and address in there. It usually takes about 5 to 6 days to take hold, but it will make it so if you do that, or more importantly, your customer does that, they won't get that onslaught of phone calls, texts, everything, where you've got all these people that are reaching out to them, just confusing them, frankly, annoying the hell out of them. So we'll get that information out ASAP, but that's grown to be a pretty huge thing, I'd say in the last 6 to 12 months. So.
Agree, and
Yeah.
I just pulled it up on the screen here. There's actually a petition that's going around. We're going to send this out as well because, frankly, I think it's terrible that the credit bureaus can share our clients' personal information to companies that they did not acknowledge the consent to share it with. So we'll send it out. There's a petition to stop these trigger leads. I think they will go away at some point.
Yeah.
But in the meantime, these credit report companies have raised their prices and done a bunch of stuff that that's annoying, right? But we wanted to get to the information to you guys so you can best leverage it, educate your clients, protect your clients. But you know, the good news and the call to action here, aside from, you know, signing the petition, is it's never too early for your clients to have that soft pull, and there's zero downside to the soft pull and having a pre-approval conversation. We can get it done in as little as 15 minutes over the phone with them. Okay. Moving to current programs and interest rates. Okay. Guaranteed Rate has what we call a rate reduce platform. Okay. There are several programs underneath the rate reduce umbrella. And they're all kind of designed to enhance buyer affordability. Okay. So we've got programs that offer down payment assistance. We have programs that offer reduced interest rates. Some of them you have to be a first-time buyer. Some of them you do not. Some of them will be based on the specific address of the property. Other cases, it just has to be in the census tract in Cook County, DuPage here in Chicago. Okay. So, you know, just as an example, we have it's called a home run program. You have to be a first-time buyer, 3% minimum down, conventional financing. But if it's eligible for this program, there's no MI, no mortgage insurance on the program, and you're getting anywhere between 0.5 or a point lower interest rate on this particular program. Okay. So the call to action, if you have buyers that want to compare rates, get us in touch with them. We can run this program and see if they're eligible. Okay. On the listing side, if you have a listing that's hitting the market, I would want to market that listing as being eligible for a 0.5 point lower interest rate.
Yeah. That's
going to help your sales price and help the affordability of that buyer. Okay. From what I understand, you know, we'll need to rely on you guys to let us know when those listings go live. Okay. So by all means, reach out to us, or if you're getting ready to list it, reach out. We can give you some marketing material and some examples to let you know if this program's eligible. Okay. Aaron, anything on the rate reduce and incentive programs that we have you wanted to add?
You know, just there's enough of those programs where, you know, you as an agent, it's almost impossible to memorize all of them and know. I mean, it's hard for some of us sometimes because it's, you know, they change like the wind. But the one thing that's been consistent in the last, I'm going to say year and a half has been programs that take advantage of certain census tracts, really based off of area. And based off of income levels, not as much first-time home buyer, but it's really income level and area. So I think those are the three key components: income levels, subject property address, and whether or not somebody's a first-time home buyer. I guess if you want to slide that third one in there. But yeah, anytime you'd like to see if any of your listings would qualify for any of that, just send us the address super fast. It takes us 5 minutes to look at it, not even. And yeah, John, just like you had said, you know, if a customer is considering, you know, if you got a buyer that's out there and they're considering 2 or 3 places, and one of them, you know, they can get a 6 1/4 on, and one of them they can get 6 3/4 on, that might be enough to make a move. And it also shows, I mean, even if there's nothing out there, it shows that you're out there looking for the best deal on behalf of your buyer, right? I mean, it's more added value that you're giving your buyer and your seller, frankly. So, you know, if you tell your seller, hey, I did a little bit of research and I found out that this property qualifies for a special incentive program, we're going to pop it out there and just see if it helps pick up some activity. They're going to notice that. They're not going to forget that. So, yeah, we had one pop up this, let's see, this would have been Friday. An agent, Stephanie Cutter, asked me, hey, with this specific property address, does it qualify for anything special? Looked it up. And it qualified for, I did sort of an apples to apples comparison. The rate was about 65 basis points less just because of the area that it was in. And income qualifications didn't matter at all. So, you know, you get somebody that's making 150 grand, they want to buy in that area, single family house, they're going to get a better deal just because of where it's at. So I think that's enough to warrant at least a question or a conversation, especially because everybody's so sensitive on just monthly payment, price, rate right now. So, yeah.
Yeah, I mean, if I was getting a 0.5 point lower interest rate, I probably wouldn't care about 5 grand on the purchase price.
Right.
You know what I mean? To get that deal over the hump.
Right. It helps with negotiations, right? That bathtub that's the wrong color doesn't seem as big of a deal, you know? So.
Yeah, and just to kind of repave this, at guaranteed rate, we've got 40 different banks and credit unions that essentially compete for the right to win the client's business. Okay, so when it comes to this rate reduced program, there are dozens of options within this program where if your client's talking to us, they're essentially talking to 40 different banks and credit unions at once. We are not a captive company. So we've got an open wholesale platform. We are advisors to our clients. Okay, we're not taking a cookie cutter approach. Every client is different. Every loan program is different. Every home is different. So, you know, by all means, put us in touch with your clients or come to us with questions. We're happy to give you the information, help you look good, win your client the deal, and give them a good experience along the way. One last thing I wanted to mention here, in terms of, we've talked about the multi-unit conventional financing coming back, right? So 5% down on 2 to 4 unit properties. We were looking at examples of this, and I just wanted to highlight the interest rate that client is getting today on 5% down conventional. The price adjustments are significantly lower than they were 6 months ago. So the client that put 20% down on a home, multi-unit home in October, got a higher rate than the person that put 20% down, right? So the 5% down deal today is getting a better rate than the 20% deal got 6 months ago. Okay. So if you have those house hackers out there, or people that are looking to invest, this is an owner-occupied program, but it's a great way to, you know, augment your client's net worth with multi-unit real estate. Okay. Real quick, I know we have one question, or at least that came into the chat. Let's take a look. So average cost of the report. I mean, we're paying sometimes $150, $200 a credit report. Now, that's not what we're charging the customer. Okay. But what used to be a $35 charge to the customer, and now some cases is $100, and that's industry wide. Okay. So one of those things to be aware of, and we'll leverage that soft pull. So there's no charge to the client for that initial pre-approval conversation. Okay. But the costs are up on credit reports. Okay. Aaron, anything you want to add before we go into the wins of the week?
No, sir.
All right, cool. So we're happy to have your attendance and you join in these calls. Again, we will send out a recap of the agenda as well as links to articles and stuff that we reference here on the call. After the call last time, we heard from one of my agents that had a client that was going to go under contract on a new construction condo. Okay. This is a client that had a reload program with their employer, but the bank they were dealing with, that they had the inside track special treatment, was not able to lend on the condo because it was a first in new construction deal. Okay. So that client came to us. They got a very competitive rate. We're moving forward, probably closing in the next 30, 45 days or so. Okay. A nice win for our clients. One question I saw that came in as far as where current rates are at. This is a long answer. okay, but rates are a tick higher than they were, say, a week ago. Okay, so we're probably in the mid to high sixes on a 30-year fixed, call it 6.75 or so. Okay. However, with the programs that we're talking about under rate reduce, we're seeing rates that come in at 6%, sometimes in the fives, depending on where the property is and what the borrower's profile looks like. Okay, so saving 100 basis points on, on the mortgage allows them to afford about 10% more home. Okay, so that 500K price just got a payment that's equivalent at 550 with a lower interest rate. Okay, so by all means, come to us with those questions and scenarios. We can get you quick answers and help you create those wins for your clients. Aaron, let's hear your win for the week, and then we'll take it home here.
Yeah, last value add, and we'll wrap this up. So I think on our first call, I had mentioned an awesome thing to do and a reason to reach out to prior clients, which we're all trying to figure out a reason to stay in touch, right? Is to, for those that are homeowners, reach out about their homeowner exemption. Okay. Some of you heard me talk about this till I'm blue in the face, but for those of you that need a quick refresher, you can just go online and see anybody that owns a home, if they've claimed their homeowner exemption in the last few years since they've lived in the property. I did a bunch of these reach outs really at the end of Q3 last year, beginning of Q4, and some of these are starting to come to fruition. So I've had a couple people send me gift cards, which is kind of cool. Obviously that's not the reason that I'm doing it, but I got a $50 gift card for Starbucks. I didn't even know you could spend $50 on coffee at one shot, but you can. And one of my buddies, Lalo Garcia, who's the one that kind of got me into this in the first place, I think got a little chunk of change from somebody. I don't want to shell out any specifics, but it's a really good value add, guys. It just shows your client that you're going in, you're looking out for them, you're trying to save them a couple bucks. Also, it's January, and when it's January, that's when heating bills are the highest, gas bills are the highest, HOA dues have adjusted, insurance has adjusted. It just feels like everything is way more expensive in January than it was November and December. So if you can save somebody, I mean, this gal, I saved $3,700 and she sent me 50. That's a pretty sweet deal for her. And I guarantee you the next time she's out and about and somebody says, hey, I need a mortgage or whatever, I'm going to be top of mind. I mean, that's just a way to just solidify yourself. So if you need, anybody or any more information on that, definitely give me a shout. I'll walk you through exactly, what to say, how to look, all those details. It takes maybe 30 seconds per person. Yeah, Lalo says he's got free Starbucks for the whole year. So
there we go.
Yeah.
Last question. I came in a little late. Is that census tract rate available in the burbs as well? It absolutely is, depending on the specific address of the property. But there's other programs, as long as it's in DuPage County, Cook County, and the borrower's under a certain income threshold,
Yep.
It's wide open. Okay, so by all means, shoot us your questions, your addresses. We can let you know what's possible. We will get a recap of the agenda out to everyone, here later today, along with the link to the, to the petition as well. We are having that webinar 2 p.m. on Thursday with Lawrence Yoon, looking at market updates here going into the spring. To Aaron's point, the Cook County tax bill is going to be out in a couple of weeks. Great touch point for your clients to check on if they have that exemption or not.
Yep.
And by all means, if you have questions, we are here to make your life easier, to make you look good in front of your clients, to save them money and give them a great experience along the way. So let's have a great Monday. Thank you again for being on the call, everybody. We will get a recap out shortly, and we will see you in 2 Mondays from now. So our next session is going to be February 5th. Have a great week, everybody. On behalf of Aaron Wise and myself, John Mooney, we'll see you in a couple weeks. Have a great
Have a
one.
great week. Let's go.